There we go.
All right. Hopefully we're up and running here. It's not showing it on my phone yet. Says we're going. Let me just.
Yeah, we're going. We're recording. So if anybody's watching it, they'll catch from the beginning. So cool. So I am Michael Fisher. I work for Hancock Management Mortgage. I'm branch manager out of Novi, Michigan. And I've got Josh Stockton along with us today. Go ahead and introduce yourself, Josh.
Hey guys, I'm Josh Stockton. I work with Keller Williams in the area. Love working with Mike. He's a great guy, and we got a good presentation for you tonight. Hopefully going to take out about a half hour of your time, get you some good information, and hopefully get you out there to get some good offers on some houses, get you moved into your new house.
Awesome. Thanks, Josh. So the whole point of tonight was really to remind folks to be prepared and give you tips as to how to get your offer to the top of the pile. So it's pretty straightforward. We're going to give you some best practices. We're going to give you tips. If you want to reach out to us, fantastic. But we're doing this to try to increase the awareness and education level of folks that are buying, so that ultimately this process is a whole lot smoother. So that's our goal. We're going to jump through and maybe look at a few slides. We're going to do a couple examples and really just try to focus on best practices. So without further ado, I'm going to, I guess, start our slideshow here. I'm going to jump over and excuse the presentation part of it here, but let's go to my slideshow. We'll get it started. All right, so hopefully this is going to work for us from the beginning. Let me know if this is working, Josh. You see me or you see the slide? Oh, I probably got to click on that button, right? There you go. Now you see the slide, right? Okay, Josh is muted. Fisher's on the slide.
I gotcha.
Okay, cool.
I still see you.
Oh, you still see me. Oh, geez. All right.
The joys of technology.
Yeah. All right. Start slideshow from the beginning. There we go. There you go. Can you see the slideshow now?
I'm still seeing you.
All right. Well, maybe we'll jump back to Josh on the slideshow. Step one, I'm just going to read what I see because I'm not getting my share to work correctly. Understanding how much you actually need to put down. This is huge. And this is where I think a lot of folks get perhaps misinformation, especially as first-time home buyers. Many times folks will talk to lenders about a home program and only focus on the down payment. You know, for example, there's a lot of programs that are zero down. There's a VA mortgage, there's rural development financing, there's some state grant programs, and they're pretty close to zero down. However, those programs do not automatically mean zero out of pocket. So I think it's very important to understand that when somebody says zero down, that doesn't always equate to zero out of pocket. I've made a couple examples for you. Let's see if I can get one of these examples to pull up on my screen share here. Because I think it's very important to actually do the math, run through what your cash out of pocket is, and start out with that. Because if you don't have that right, the whole experience is going to be a bad experience. So, all right, let's try one more time to do my screen share here. And we'll get one of our great examples up on the page. Screen share. Okay, we'll go over to this one. Boom. Okay. Okay, it says I'm screen sharing. What do you think, Josh? Does it look like I'm screen sharing?
Looks like you're screen sharing now. We got you.
Okay, screen sharing, maybe to infinity and beyond, so I'm not sure. Okay. Oops. All right, I picked the slide screen. All right. All right. Can you see the example screen?
Yep.
Okay. So I'm on the example screen for in this case like a rural development loan, and I did one for an FHA loan. I kind of did them side by side. The whole point is to show you that ultimately you need to get this kind of information from whoever you work with on the finance end, because it's very difficult as a buyer to understand what you need to close. So an example here I had one buyer looking at a rural development loan, which is a loan that allows you up to 100% of the finance purchase price. Rural development loan does include a finance fee. So you see here the loan is actually higher than the purchase price because a finance fee from the USDA Department of Agriculture, believe it or not, has been rolled into the financing. We calculate the terms on a 30-year mortgage, the principal and interest. This is not a guarantee. This is just, rough estimate. We take 1/12 of the homeowner's insurance, the annual amount, take 1/12 of the taxes, add those to monthly mortgage insurance, and come up with a payment of around $11.50, just an approximate number. Down below, we take a look at paying taxes up front, paying some insurance up front. Most real estate companies have some document fees, which we included. Added in some money for closing costs. Found a lender that's willing to give us some money towards our closing costs. And then down at the bottom, we see seller contribution. Oh, look, the seller's going to kick in $5,500 for us. So we actually, in this case, we do need pretty close to zero. So that's a good example of a zero to close, but it only happened because the seller kicked in $5,500. So that's one example of a rural development loan where the seller covered our costs. But if we hadn't asked the seller to do that, we would have needed $5,600 to close. Does that make sense, Josh? All right, cool. Let's see if I had another example here. Oh, this example, I don't think I have the down payment right. So I'm going to open one other screen. Here we go. Okay, so I have another example here. And this example, I compared FHA on the same purchase price. In this case, FHA has a 3.5% down payment. So the total dollar amount needed at the bottom, still around $12,000. Seller agreed to kick in $44,000. In this case, the buyer had to come to close with $7,500. So I don't want to, beat a dead horse about how principal and interest and tax and insurance work, but you can see by comparing the numbers up front, you know that, if you're buying this house, you don't stick with just the 3.5. You've got to add in all the costs. You actually get a bottom line number that's closer to $12,000. So if you can get the seller to pay some, you end up closer to $7,000. So again, just some examples of doing mortgage math and making sure that you're truly prepared to get started. So to me, that's very important right off the bat to understand that your mortgage numbers, at least approximate numbers, match what your goals are. So I'm going to jump back, find Josh here. All right, stop sharing. All right, you still with me there, Josh?
I'm with you. You took me by surprise there. I was muted, so I didn't get over you.
All right. So again, just understanding the basics as far as the numbers when it comes to your total mortgage math. Very, very important. Different programs, pros and cons. I don't necessarily want to tell anyone that they have to apply for a certain kind of mortgage. Usually the best advice for a mortgage is starting with a good mortgage professional. And that professional will help you find programs that make sense for you. You can certainly jump online and Google information about programs, but not all programs are built the same. For example, conventional mortgages, usually if you have credit scores over 680, you're going to find that the rates, the down payments are a little bit more aggressive, larger down payment, but also better rates, lower PMI, very attractive for folks that are putting a down payment. However, you will find that if you're doing a lower down payment, FHA mortgage in many cases will be a lot better for you on the pocketbook for cash flows and for your total payments. So as I showed you in the previous slide, just putting the two programs side by side in a similar priced home with similar taxes will allow you to compare which program might make the most sense for you. Now, if you served, we certainly appreciate your service. VA loan is one of the best mortgages in America, hands down. Certainly makes sense to start out right off the bat informing your mortgage professional that you have served and that you may be eligible for veterans benefits. A VA home loan is a zero down home loan. If you elect to just put zero down, that's your right, you've earned it. And a VA home loan also allows the seller to potentially pay a portion of your closing costs. So we see many veterans that come in, get some help from the lender in closing costs, get some help from the seller, and truly close with zero out of pocket. Down payment assistance is something that you'll see folks talk about through Michigan State Housing Development Authority, MSHDA. MSHDA has home buyer grants. The most common one is a $7,500 allowance that folks use towards a down payment. Generally, married folks or folks that are living together can apply jointly. Usually their scores have to be in the mid 600s to qualify to take a home buyer's education course. That money is typically a lien on the property. It's not always free money. So that's an example of a down payment assistance that your mortgage professional can help guide you through. So I talked a little bit, I ran some specific examples, but the most important message is to do your math and work with someone that knows how to explain the math. If you don't know what your payments will be and you don't know what your cash to close is, it's time to talk to another lender. Bottom line, very, very simple. So I'm going to jump back over to Josh. We're going to talk a little bit about getting in the right frame of mind to shop, making sure you have the right documents to shop, putting a good solid offer together, and how to submit your offer at the right time and hopefully beat out your competition. Make sense, Josh?
Sounds good to me.
All right, cool. Let's switch back over to you. All right.
All right. So hopefully I'm up and running here and you can see the slides on my end.
Yep.
All right. Awesome. Thanks for all that information, Mike. There's definitely a lot of good information. There's a ton of programs out there and a lot of different things that are hard to keep track of. So it really is important to work with a really good mortgage lender. I have had some transactions that have fallen apart in the middle just because the lender was not up to par on everything that was going on, wasn't handling issues in a timely manner and letting them become a lot bigger than they needed to be, so things happen. So you definitely want to find a mortgage lender that you feel like you can work with, that is giving you the information you're comfortable with. That's definitely a very important part. So now talking about my end of it a little bit more on the real estate side, and we're definitely in a really competitive market right now. We're in a very strong seller's market. The majority of homes that are out there that are priced well and are in decent condition are selling within the first week or two, which generally means if you're not looking at a house right away, you probably aren't going to get it. And along with that, even if you are looking at it, there's a lot of other people that are looking at it as well, and they're all trying to get the same house. So you have a lot of competition out there. So what we're talking about here is a way to make your offers stand out a little bit more over the competition, since there probably are going to be a lot of people interested in the same houses that you're looking at. So when you're talking about moving your offer to the top of the pile, you want to sweeten the deal and make it really stand out to the seller. So the first thing that you can do after you've talked to your good mortgage person is to have your pre-approval letter ready. I've had people that have gone through, they've gotten out and fallen in love with the house and said, yeah, let's write up an offer on it, and it's Friday night at 6 o'clock, and then they say, oh, I have to wait until Monday morning to talk to my mortgage lender to get my pre-approval letter. House sells over the weekend, they can't get it. So it's really important that you're talking to your real estate agent ahead of time before shopping so that everybody's on the same page, you have the pre-approval letter, and you're ready to move forward when you get an offer. Second thing that we want to do is make a solid offer. There's a lot of people out there that, I hear it all the time, I want a good deal, I want a good deal. And obviously a good deal means different things to a lot of different people. But right now, with houses selling as quickly as they are, if your offer isn't the one that gets accepted, there's going to be multiple offers after yours that could potentially be better. If I'm on the selling side and I have somebody send in an offer and they're trying to lowball and negotiate and get the price way down, I'll tell my seller to wait, because something better is probably going to come along in the very near future. So everybody wants a deal, but right now, getting the house is the deal. If you're beating out the competition and you're making good solid offers and getting a house in there, that's the market that we're in right now. So it's important to understand that going in. Have an agent that is willing to talk to you about that and kind of stand up for that, because I have had people that wanted to put in low offers and, you know, they were ballpark, but the seller just rejected them. They didn't even bother with a counter offer to try to get some more out of the price because they knew something better would be coming along. Third thing that we want to do is you want to get out there as fast as possible, be on top of things, see the house first so that you can get your offer in first. If you can get to the seller, it is a seller's market, but if you can have your pre-approval ready, you're making a solid offer, and you can get it out there quickly before other people have time to put an offer in, the sellers want to sell. So if you have a good offer, they don't want to wait around and risk losing a good offer for something that might be a little bit better coming along. So if you can really get that out there, work with your real estate agent, make sure that they're sending you stuff and you can get out as quickly as possible to see houses, you'll really have a hand up on the competition. There's no, it's Monday afternoon, here's some houses we like, let's go look Saturday or Sunday, because those houses either won't be there or a lot of people will have seen them by then and be preparing offers as well. If you can see a house that comes on the market on Monday and you're seeing it Monday night, you have first dibs on that house. That's the best possible position that you can be in. So the next thing we want to talk about, because there are a lot of people looking at the houses, are multiple offer situations. And again, there's some things that you can do to really make your offer stand out over other offers that are out there, and make sure that you get the house after you've seen one that you really, really like. First thing that you can do, don't shop at the top of your price range. If you're,
Josh, are you able to get that slide up on your presentation? Because I'm seeing your first slide. I don't know. Can you?
It's still showing the first slide?
Yeah, click down a little bit. I don't think it's.
I don't know. I'm going through it on my end. Let me stop sharing here.
Yeah, I don't know. Maybe it didn't look like it was showing quite right. Maybe the screen share wasn't quite right. But
let's see. Does that look better?
Yeah, that looks way better. Yep.
All right, cool. Let me go back.
I didn't want to go too far and then realize we probably should have just stopped for a quick second. So
no problem.
That's kind of what we were talking about with the multiple offer situations right there.
All right, so it's still not updating on your end because I went back. I'm on the full screen here. So, all right. Can you hear me again?
Yep, we're good.
All right, cool. So we can email all these out too, just in case it's not showing up right, but hopefully it is, and we'll keep going here. So talking back about multiple offer situations, when there is a lot of competition out there, I said don't shop at the top of your price range. You need to have a little bit of flexibility in price. If you're pre-approved for a $200,000 purchase price and you want to buy a $200,000 house, chances are if there's multiple offers, somebody's going to come in over the asking price. If you're only approved to $200,000, you don't have any leeway to go up above that asking price. Whereas if you're looking at a house at $175 and you're pre-approved to $200, you have some wiggle room in there to go in a fair amount over asking price and beat out the competition. A lot of people will be in that same boat where they can go a little bit. If the house is listed at $175,000, they might be able to offer $178, $179, get it a little bit above asking price. But if you can say, I really like this house, I'm pre-approved for $200, I want to offer $185 on this house, that puts you in a much more solid position for the sellers than somebody else who can only go a little bit over asking price. You have a lot more flexibility to get in there and make your offer be the winning offer. Another thing that you can do with that, because obviously you can't finance more than the house appraises for. So sometimes if you get into a bidding war and you go over asking price, the house doesn't quite appraise for that full amount. You can write into your offer that you will guarantee a certain amount over an appraisal amount. I had one last year. It was in Royal Oak where everything was just selling like crazy. We actually wrote an offer $10,000 over asking price, and because the buyers did have cash on hand, we guaranteed that even if the house only appraised for the $175,000 it was listed at, or whatever the listing price was, they were going to offer, they would put up cash $10,000 over that appraisal value to make sure that they got that house. So they won the offer, even though there were other offers a little bit higher that didn't have that guarantee. So they got in there, they were able to get that offer accepted, and the appraisal ended up coming back at price, so they didn't really have to put any extra money out of pocket. So they were really excited about that one. Next thing, and this is kind of a newer one, and some people are more okay with it than another one, but you want to write a handwritten letter to the seller. It doesn't have to be anything that's crazy, anything in detail, but basically if you can get some kind of an emotional connection with the seller, they're a little bit more willing to fight for you if there's a few offers that are close together. And the offer can be really basic. Really all you have to do is thank the sellers for letting you see their house and having the chance to purchase it. Tell them how great their house is, how excited you are about possibly living into the house. Promise to take care of the house the way that they've taken care of the house, because obviously they've shown great care. And then just wish them luck in the sale. Say, you know what, even if we're not the offer that's accepted, we really, really like your house. We really hope that you get a good offer on it. If you can do that, the sellers will see that. And again, if you're close in a different situation, they're a lot more willing to go with you because you've got a little bit more of an emotional connection with them. They know how interested you are in the house, and they'll be a lot more willing to work with you just because they have a little bit more of a feeling of familiarity with you. We actually had a guy in my office. It was that exact situation. Multiple offers on it, multiple offers over asking price of the house. His clients wrote a nice letter to the sellers, and he was only, I think they told him, the 4th highest offer. So there were 3 offers higher than his, but because they wrote such a nice letter to the sellers wanted to accept their offer and work with them. So it's definitely something that can make a difference in a multiple offer situation. And then the last little strategy that you can do, if you're in a position that you can do it, is you can give the seller some incentives outside of just the highest sale price. One of the big ways you can do this is with occupancy. A lot of times people sell their house and then need to buy a new house, so they don't want to move out of this house until they have a new house to move into. And if they did 30 days of occupancy, they would stay in the house 30 days after you owned it and basically pay you rent for a month. So, you know, instead of offering a higher asking price, you could offer them a free month of rent to stay in the house, or 2 months, depending on how much time that they need, instead of doing the usual charge them for staying in the house. So it's something that can ease a little bit of pressure and make them feel a little bit more comfortable about not being rushed out of the house. So they have time to move and they're a little bit more comfortable with everything. Another thing that you can do, if you're in the position to do it, your mortgage officer is good with it, is to work on a quick close. There's a lot of people out there that, you know, want to stretch it out. They have vacations, they have, you know, life happens sometimes. But if you can find a mortgage lender that can close you quickly and ahead of the competition, when sellers are ready to sell, they want to be done with it, and there's less that can go wrong if you can sell or close quickly. So if you have the opportunity to do that, you know, minimize the amount of time that you have to close on it. Don't drag it out too much, and that'll make your offer a little bit more attractive. The last thing you can do when you put an offer down on a house, you have to put a deposit down, just to, you know, put a little bit of skin in the game, make the contract real. And if you put more money down than anybody else, that'll show that you're more serious. You've got a little bit more skin in the game. You're willing to take a little bit more risk on it, and you really want the house. So a lot of times I've seen it where there's very similar offers, and one person put down $2,000 for a deposit and one put down $5,000. Person that put down $5,000 won it, even though they weren't necessarily the highest offer. So those are a few things that you can definitely do to really sweeten the deal and make your offer really stand out to the sellers. The final thing you can do is just minimize the costs for the sellers. A lot of times when people write up contracts, they'll ask for the sellers to pay for a home warranty, or to pay for some kind of inspections, or to ask for some kind of concessions when they're you know, buying the house. If you either guarantee not to ask for concessions, or you don't ask for the home warranties or anything like that, it really minimizes the risk to the sellers and the money that they're paying back out of pocket to the buyers. And they really do appreciate that. So even if you're not necessarily the highest offer, they see that you're not trying to nickel and dime them like somebody else might be. So it'll allow your offer to stand out a little bit more and be really good. So that's kind of the gist of everything that we had here for you. Just to kind of summarize. Oh, Mike, you want to?
I got a couple things to add to that. Absolutely. Yep. And you know, I took a look at this slide earlier today. I didn't want to get in the middle of editing it too much because I thought it made a ton of sense. One thing I want to note is that you know, we're just talking about running numbers for first-time buyers, and you know, on one hand, I said, oh, you can ask the seller for help. And on the other hand, Josh said, well, if you ask the seller for too much help, you might have a hard time getting the house. So I think it's important to understand that when you work out your mortgage program and you try to figure out how much cash you need, if you're a person that needs a bunch of help from a seller and perhaps some mortgage concessions, it may, in some cases, be hard for you to offer on the hottest homes with that structure, with that type of offer, just like Josh had indicated. So in some cases, if you can perhaps come up with a little more money, get a gift, find a lender who's more willing to work with you on credits, that can make it easier to negotiate on the hottest homes. Would you agree with that, Josh?
Yeah, definitely. And they all kind of work together. So in a case where you're working with someone and you need some concessions, if you have that flexibility of not being at the top of your price range, you can offer a little bit over asking price and get the concessions in there so that it's still netting out the same to the seller. It doesn't really make a difference to them, but you're saving a little bit of money out of pocket on it.
Yeah. Now, I'm going to add an additional tip that you didn't put on the presentation, and I didn't ask you to put on there because this is a personal favorite of mine. And I think it does make a difference. And I think this is actually a very important tip. So anybody that's still with us here, or is catching this on the replay, stop what you're doing. This is really, really, really important. I think it's critical in this market that you work with a lender who's willing to dial the listing agent, introduce themselves as the lender that's working on the transaction, indicate to the listing agent how cooperative you've been, how forthcoming you've been with all the documents that are needed to proceed in the home loan, that the application is in exceptional order, that you as a buyer are so well prepared, you have forwarded every document, and the only thing that's needed to add to the application is a purchase agreement. So, in essence, the conversation would go something like this. Mr. Listing Agent, it's Mike Fisher with Hancock Mortgage. You may recognize me from so-and-so transaction in the past. Maybe a lender that's been around, wink, wink, and knows some listing agents. It could drop some names. That helps too. We certainly wanted to make sure you received the letter that we forwarded you for Mr. John Smith. Mr. John Smith is an excellent buyer. Hopefully you can understand the details of his program as laid out in the pre-approval letter. We want to let you know that John Smith has been an exceptional client to work with. We put him in our A bucket as far as borrowers. We have all of his paperwork. We've certainly run the automated desktop underwriting, reviewed his application documents. He meets all the program parameters. We don't really need any updates from him because he's been so forthcoming with us. We would just like to actually plug in a purchase agreement and perhaps get his loan in process today, hopefully get his application started today, and maybe even order an appraisal by Monday. That kind of conversation with a listing agent goes a long way, because that listing agent sees that not only is the buyer willing to play ball, but the lender that's working with that buyer is motivated, excited, understands the purchase market, and wants to work with all parties to close as quickly as possible. Does that make sense, Josh?
Makes sense to me. And I think, everything really boils down to work with good people. Work with people that you're comfortable with, ask difficult questions to make sure that they're willing to give you the information and work with you. And that'll save a lot of hassle. You really need to find somebody that you're comfortable with. Mike and I work in a commission business. Everybody that we meet, we're applying for the job. We're not, you're not stuck with us even though you've talked to us. So we want to make sure that we're working hard for you and make sure that we're earning your business, because it's really easy to lose that business. And that's why it's important to work with good people that understand that. There's a lot of people that have an attitude to think that you're lucky for working with them, and that's really not the case. We're here to make your home ownership dream come true. We're here to help you through this process, but ultimately this is your process. And the only way to have a good ending on it is if you end up happy, and the only way that happens is if you're working with good people that are helping you through this process and communicating well and making sure that everything is taken care of for you so that there's not any big issues.
Cool. One last thing, and we'll jump back to the slides. Josh and I are not, we don't necessarily work for the same company, the same team. We're definitely separate companies. You can work with whoever you want on the mortgage and real estate side. I certainly take my relationships with real estate agents seriously. I don't work with just any realtor under the sun. I was referred to Josh by another agent. Josh was referred to me by another agent. And essentially it was in the pursuit of finding excellence and finding good people to work with. So to us, the folks that you work with, whether it's us or someone else, understand the local market, are very reputable, follow some of the steps that we've laid out in this presentation, and ultimately, like we said, help you put your best foot forward. So enough selfless plugs there. Let's jump back to the presentation. What do we got left?
Last thing I have here is just hopefully it's popping up right and showing right our information. We are here. If you have any questions in the process of anything, whether you're already working with somebody or not, you just want a second opinion, we're happy to help. I'll let Mike answer this for him, but for me, text is usually the fastest way to get a hold of me, but I do answer Facebook messages, phone calls, emails, whatever is easiest for you to get a hold of me, but text will probably get you the fastest response. And I'll let this sit up here for a minute just so that you have that. The link that we sent you out to view this, you should be able to replay this as well. We are recording it, so if you missed anything, if there's any screens that you wanted to see a little bit more closely, you can go back into the link when this is done and pause where you need to pause, or just rewatch anything that you didn't get. But again, this is our information. Mike, what's the best way to contact you?
Best way to contact me, just what's on the screen there, my email, my cell phone, or mtfisherloans.com, F-I-S-C-H-E-R, either way. Facebook Messenger as well. If you're seeing this post, you probably see, Facebook Messenger is really quick. I do want to sling in, I guess, things that I realized, we didn't talk a ton about. and I think it's important that folks recognize this too. We talked about offering on houses. One thing we didn't talk a ton about was actually finding the right house. And I think it's important to note that when you're working, like I see many folks kind of working on their own, or working with an inexperienced agent, or somebody that does one house a year, or is a part-timer, or works with a mortgage lender who really perhaps isn't dedicated, doesn't even give you their cell phone number. You can certainly find information online. You can go to Zillow, you can go to Realtor.com. There's all kinds of places to find information. But as Josh mentioned, sometimes the hottest homes don't syndicate everywhere online. So ultimately, it's important to have a bit of insider information. It's important to perhaps have a person who's combing the database for you, a person who is connected well locally, person who perhaps watches Facebook groups. I personally admin a handful of Facebook groups where I watch for maybe for sale by owners or folks that haven't quite listed yet, so that we can help connect people to the opportunities, hopefully as soon as they come up or before they come up, so that if there is a bidding war, as Josh mentioned, that, like you said, you're the first person there. So do you have any tips to add as it relates to finding the house, Josh? So I think that, that's something we didn't talk about much, but it can be a big challenge in today's market.
You definitely brought up some good points there. Everybody loves Zillow. Everybody always talks about Zillow, says the house is worth this. This is Zillow. The important thing to remember is that Zillow, for as beneficial as it is, it's really outdated. I actually read a statistic the other day that about 2/3 of the listings on Zillow are no longer active, even though they're showing active on there. I know agents in my office that had houses that sold over a year ago that are still showing as active on Zillow. They can't get it updated for whatever reason. And then, like Mike mentioned, and I mentioned earlier, if you're in a house that's selling within 2 or 3 days, it may not be up on Zillow until the 2nd or 3rd day. So if you wait until it's on Zillow, you're missing your opportunity, because there's probably already an offer on it if it's a really good house. So like Mike mentioned, it's definitely important to work with somebody that can set up some kind of a system that will either notify you as soon as something becomes available on the market, somebody that's actively looking at the inventory on the market and knows what's out there. I personally have a goal of previewing at least 2 houses a day. So I'm going out and seeing the new inventory, seeing what's out there, so that if I have buyers that I think might like the house, I can call them as soon as I walk on and say, hey, we need to see this house tonight. This is a great house, but it won't last. So you need to find somebody that really is out there working for you and with you. So that's a great point, Mike.
Cool. Awesome, man. Well, I think as much as you and I like to talk, I think we kind of went pretty close to our half an hour. So I will just leave it with, keep yourself informed. Make sure you understand your numbers. Make sure you understand what the market looks like. Work with folks that are communicative, and put your best foot forward, just like Josh said.
All right. Well, thanks for being on here with me, Mike. It was a pleasure.
Thank you, sir. I appreciate it. We'll post this a couple places online, and anybody who sees this that has it, you can comment on the YouTube link or like or share with a friend. Have a great night.
Bye, guys.